What's going on, guys? I have an awesome coaching call that I wanted to share with you guys. On this coaching call, I break down taxes for online fitness coaches. Now, the thing is, a lot of people get scared or intimidated when they think about taxes, but it's really not all that intimidating at all. The problem is lack of organization and lack of preparation. You see, many first-time business owners have never filed taxes for their business on their own. They're used to getting paid out through a W-2 from a 9-to-5 employer. When you file taxes as a W-2, your taxes come out of your paycheck as you earn your paycheck. And at the end of the year, that money is then sent into the IRS. So the tax is already done for you. But when you are a business owner and you're making income, you're not paying out taxes as you go. And so at the end of the year, there's all this income that you have to pay taxes on. And where a lot of business owners make mistakes is one, they don't properly save for taxes because they're unfamiliar with how it works. And two, they don't stay organized. And it's an absolute mess for accounting on the back end when trying to catch up for the full calendar year. So my recommendation for you is this: stay organized and save for taxes. Those are the two biggest tips that I'm going to give you in the beginning of this call. But throughout this training, I'm going to show you how I stay organized as a business owner, how I save for taxes as a business owner. So that way, when I file my taxes at the end of the year, it's as simple as calling up my CPA, him letting me know what I owe, sending him the money, and I never hear from the IRS. Think about having a business and never having to worry about filing your taxes incorrectly or worrying about the IRS coming knocking at your door. It is relieving, to say the least. So in this training, I break down the simple steps that you could take to stay organized in 2024 so you can make taxes a breeze as a business owner. All right, so we're going to break down taxes for the business owner. So the first things first is you read tax-free wealth. I feel like that probably gave you a pretty solid foundation on like how the tax system works. The good news is that the IRS is very favorable for people who are starting businesses. And so I think your first 2 or 3 years, you get a pretty lenient grace period. So like if you make mistakes, no one's going to come knocking on your door. They're just going to, come let you know where to get corrected. You're not going to get in trouble. But after 2 or 3 years, if you keep making mistakes, then they're going to be a little bit harder on you. So there's really no pressure for your first 2 to 3 years of filing taxes. They're pretty understanding. The next thing is like the more you can stay organized ahead of time, the less of a logistical nightmare you're going to create at the end of the year. Where a lot of people run into trouble, where people get frantic about taxes, is like they haven't stayed organized at all the entire year. And then when it's time to do taxes, they have 12 months of bookkeeping to do. So that's where things get pretty gnarly. So the first thing is like you want your LLC in place. So you got your LLC, correct?
I haven't. No, I haven't.
Okay. So one of the few things, so LLCs really do two things. First off, the LLC doesn't have anything to do with saving taxes. Contrary to popular belief, people think that like get your LLC registered is, you're going to get tax breaks. It doesn't work like that. You pay taxes based on the state that you earn the income. So if you get your LLC registered in Delaware, but you live in California, you're going to pay California taxes. The LLC really just protects your assets. So like if you have a car, if you have a house, if you have, personal belongings, what the LLC does is that when you initiate a contract with a client, they're signing that contract with the LLC, not with you personally. And so that protects your personal assets. But what an LLC also does is it allows you to open up a business bank account. This is where staying organized on taxes really helps. So with an LLC, this grants you the opportunity to open a business bank account. And what you should do with your business bank account is have all of your income from your business go into this business bank account. So, I might have like multiple different streams of income depending on, what I'm doing that month. If it's business income, then it all just shovels into that business bank account.
Okay.
I don't make any purchases through that business bank account. I don't do anything, like nothing leaves that business bank account. Only money goes inside that business bank account. Does that make sense?
So what if it's a business expense?
So if it's a business expense, what I typically recommend is getting a business credit card and then paying off the credit card at the end of the month with the income from the business account. Because that way you can earn points. And, for example, me and Megan we're going to be taking first class round trip to Europe, all from points. So,
Okay.
yeah. So if you're making purchases for your business, I recommend putting it on a business credit card and then paying it off with the balance at the end of the month. And I'll explain that in just a second as well.
And the business credit card would be through a different bank account than the business bank account where your income goes?
It could be the same bank, could also be Amex, or it could also just be, it doesn't have to be a quote unquote credit card. It's just a credit card that you specifically use for your business.
Right. Okay.
So I think Chase has some pretty good travel reward points, things like that. So the first step is business bank account income. And then you want a business credit card, right? And this is going to be for business expenses. And then what you want is a personal bank account. And then I don't know if you use a personal credit card. If you
Yeah.
do, yeah. Okay. So if you do, then you'll just keep personal credit card. And then what I recommend just to keep things organized is a tax savings account. And then maybe even a personal savings account, right? So this is typically how the flow works. You have your business bank account. So this account is earning income throughout the month. You have your business credit card. So anything that could be deemed a business write-off. You take client out to dinner, if you buy new camera equipment, if you buy anything for your business, softwares, your monthly expenses for trainerize, etc., can
Mhm.
just go on this business credit card. And then what you can do is that just makes everything so simple, because all you would need to do with your CPA at the end of the month is give them these two numbers and everything's already separated, right? Where people run into trouble is when they have their personal credit card mixed with their business credit card, and then they have to go through the balance sheet and remember, okay, was this a business expense? Was this a personal expense? And try to divide the two because it's all jumbled up into one. But
Yeah.
if you have a business credit card and you know, hey, everything I swiped on that credit card is a business expense, you don't even need to go through it. You just give that number to the CPA and they'll be able to file it for you, right? Same thing with the personal credit card. Everything's already separated. So the more separation you can create in the beginning, the less like backtracking you have to do when it comes to accounting. What I typically recommend here is load up your business income through the business bank account.
Mhm.
At the end of the month, pay off whatever business expenses that you have on your business bank account. And then what I would do is 30% of the income that you earn from the business just should be moved into the tax savings account.
Okay.
That way, the money is put aside. A lot of people, what will happen is that they don't take saving taxes into consideration because they're a W-2 employee. Taxes come out through their paycheck the whole year.
Yeah.
And they don't realize that when you make $1,000 from a paid in full client, that you're going to have to pay taxes on that. They don't realize that. And so they spend all that money and then
Right.
they get hit with a bill and they're like, shit, I don't have this money because they didn't save for it.
Yeah.
Right. So my general rule of thumb is just whatever income I make that month, 30% of it goes into this tax savings account. Whatever's left over, what I would recommend is giving yourself some sort of livable budget, pay yourself that budget that covers your expenses for the month, and then save the rest. So let's
Mhm.
just say we're going to do this at the end of the month. You do your books, everything's good. So let's just say you make $10,000 this month, right? And you spend, say, $300 on your business, you spend $100 on your personal credit. So like these are the outstanding balances.
Mhm.
So what I would do is take the 10,000. You're going to be taxed on this income. The first thing that you do is make sure that you save for taxes. So 30% will be 3 grand. You're left with 7,000. You'll pay off your credit card. So that goes down to zero. You pay off your personal credit card. That goes back down to zero. And then this will be 6,600. So then give yourself a reasonable salary. Let's say that you live off 4 grand a month. You pay yourself 4,000 to pay your bills for the next month. And then you're able to save 2,600 bucks. Now everything's good,
Yeah.
right? You got money saved for taxes. By the time of the end of the year, they're going to hit you with the bill. You have the money put aside. You just give them that money. Your write offs will be already covered because they're separated from all of your personal expenses. And then this is money that you're going to be able to spend on, your living expenses. And then personal credit card would just be for emergencies, really. Any
Okay.
questions about how that system works?
No, that makes sense.
Now, with the how the taxes work, let's say you make $100,000 and you're
Mhm.
taxed at 30%. So, and 30% is like being ultra conservative,
Okay.
right? With write offs, you can get that pretty low. And depending on what state you live in, it's going to be a lot lower too. So, 30%, like if you can save 30%, you're overshooting, which for
Right.
me, I'm very conservative. So, I'd rather be safe than sorry. I'd rather have money left over after I pay taxes than not have enough money. So, if you make 100,000, get taxed on 30%, you're going to be taxed $30,000 on the year, right? But if you have, say, $15,000 in write offs from all the business expenses that you accrued throughout the year, what this
Yeah.
does is it brings your total income lower. So now your taxable income will be 85,000 at 30%, and that will be 25,000, right? So that's how write-offs work.
Okay.
Is it's subtracted from your net income. And
Yeah.
then whatever's left over on the net income is what gets taxed. That make sense?
Yeah.
Cool. Now, when they talk about like write-offs, for me, people will always be like, start spending money so you start lowering your taxes. It has to make sense.
Yeah.
With write-offs, you're spending $1 to save 30 cents. That's essentially what's happening. So the only only rule of thumb that I have when it comes to spending money to save money on taxes is if one, it's something that you need, two, it's something that you're going to have utility out of, and three, it's something that you're planning on doing anyway.
Right.
Right.
Okay.
So like, let's say if December comes around and, you're going to say $20,000 in taxes and, you have some cash left over that you can use to do some write-offs. And like, you've been needing a new camera, you've been needing a new laptop, or there's a mentorship program that you've been thinking about joining for 6 months, then that would be the time to do it because there are things you're going to get utility, the things that you need, and you might as well spend it early to get the write-off. For example, I had one student, Brady Hutchins, who was going to join our takeover program in January.
Mhm.
He was already set. We had the date locked in for when he was going to start. And I was like, you might as well just start a week early in December and get the write-off for 2023. And he's like, that makes sense. So it's like, it was money he was going to spend anyway. But I wouldn't go as far as to say like, oh, I'm just going to start buying all these things so my write-offs become down. It's like, you're spending $1 to save 30 cents. To me, that doesn't really make sense.
Yeah. Yeah.
Right.
It's not nothing free.
Yep.
Gotcha.
So as far as QuickBooks goes, this is a super simple platform. What QuickBooks does is it connects to all of your bank accounts and all of your credit cards. So your business credit card, your business bank account, your personal credit cards, everything goes onto QuickBooks and it loads every single transaction that you make on every single card. And it's categorized by which card. So like you'll go to your business first and then you go to your personal and then your business credit, et cetera. So it's all diversified. And then
Mhm.
you just go through and mark what was a personal expense and what was a business expense. And the reason why that does really well is because you're keeping track of your expenses as you're going throughout the year. And it makes tax season super simple because when you have a CPA, all you need to do is just give them the access to your QuickBooks because QuickBooks will track what your earned income was and what all of your business write-offs are. And your CPA can just take those numbers and calculate what you're going to owe for taxes. And if
Okay.
you've been saving taxes throughout the whole year, the money's already going to be there. You don't need to worry about it. Right. Now, where CPAs can get costly is if you don't do any of the accounting yourself, right? That's where CPAs can get expensive. But when
Okay.
you're working with a CPA simply to just file your taxes, it's only going to be like a couple $100. And I recommend having a CPA to file your taxes just because, like I mentioned, where a lot of people, quote unquote, hate the IRS and hate taxes and et cetera, is because the lingo that they use in these documents is so hard to read and understand. That's why CPAs go to schools to understand this lingo.
Okay.
Just pay them and have them tell you what you need. But if you kept your accounts clean throughout the entire year, then all they'll do is say, hey, I filed your taxes. You owe this much. You send them the money and you'll never hear from the IRS.
Okay.
It's really easy.
All right.
Any questions about this system?
No, so you just give them you can, like, share your QuickBooks account with them somehow,
Yep.
and that's you don't have to format anything, fill out any other paperwork, you just send them that and they do it?
So I'm going to get you connected with Nick.
Yeah.
So Nick is my CPA. He actually is the CPA for a lot of PTBI students. He's really great. He's very prompt. He answers your messages within 15 minutes. He'll sometimes answer my messages Saturday night, 8 p.m. So he's really great. He answers any questions that I have. And
Mhm.
I've never heard a peep from the IRS working with Nick. Essentially, the way that Nick works is you'll have an initial meeting with him. He'll kind of see what you're working with, and then he'll tell you what you need to have set up in order for him to get the best results possible. If
Okay.
you have all of this set up going into it, then there won't be much setup. He's just going to tell you like the same things. And then you keep your accounts clean. Usually on the 31st of every single month, I do my numbers, I pay off my bills and put the numbers in the right place. But
Yeah.
then I go into QuickBooks at the end of the month and I just calculate what's a business expense and what's a personal expense. At the end of the year, all I do is just give Nick access to my QuickBooks and that's it.
Okay. My second client that paid yesterday is German and lives in Germany. So I was wondering if there's a different system when it comes to receiving income from overseas.
No, I don't believe so. I think it would be different if you received income while you were overseas as a resident overseas. But if you received the income in the United States as a resident of the United States, then that income is taxed.
Right. Yeah.
Yeah.
Okay. But I don't have to worry about like paying a tax in Europe or something like that.
No,
Okay.
no. That would only be if you received the income as a resident in Europe.
Okay. The other thing is my family has like a family CPA, but I don't know if it's better to go with Nick, someone who knows this business better, or if they're all very similar.
I would personally go with Nick just because he knows the online space. He's very familiar with online fitness coaching. He's tapped in, I think he's got an audience of like 100K on TikTok and he's very, very affordable.
Okay.
So yeah, for me, the peace of mind, like you get a lot of old dogs in the tax game that don't understand online business, don't understand like what what online coaching is. And
Okay.
they can make some errors, some mistakes. I trust Nick, so I recommend going with him.
Okay. And then the reason I haven't filed for the LLC yet is because I hadn't decided between filing taxes as an LLC or S corp.
Mhm.
I don't know if you would offer guidance or if I should do more research and just
Yeah,
decide.
so I'll explain what an S corp is. What S corp does is it helps shield some of your income tax. Let's say that you make $100,000 and you're taxed at 30%. If you're in California, you have state income tax or self-employment tax, sorry. So I don't know what the self-employment tax is off the top of my head. I think it's 8%. Let me check real quick. So the California self-employment tax is 15%. So now you're paying a total of 45%. Right? That's why people are leaving California. It's
Yeah.
insane. So if you do business, if you register your business as a self-employed LLC, then 100,000 is able to get taxed at 45%. So that's going to be,
That's crazy.
yeah, 45K in taxes.
Yeah.
But if you have an LLC, or I mean, if you have an S corp, what an S corp does is it separates your income from your business income. Self-employed, all of it's grouped together because your income is your business income. But as an S corp, your business makes money and then you pay yourself as an employee of your business, right? So let's say you make $100,000, but out of that $100,000, you pay yourself, say, 4 grand a month. So 4,000 times 12. So you pay yourself $48,000 a year. That leaves you with 52,000 in business income. This still gets taxed at 30%, but you're only paying that extra 15% on the 48,000, right?
Okay.
So you're essentially protecting $52,000 from being taxed at that 15%. So you're essentially shielding part of your money
Okay.
from being taxed from that self-employment tax.
So if you're giving yourself a salary, do you have to give yourself a W-2 form, for example?
There's a platform called Gusto that Nick would probably set you up with that does that for you, right? So I use Gusto. I set a monthly salary.
Okay.
And what Gusto does is on the 1st and the 15th of every single month, it withdraws what I set my monthly salary to be. Out of that monthly salary, puts aside money into a different account for taxes. So my personal income taxes are already put aside. And then it does the W 2, it generates the W 2 automatically. And then Nick just takes the W 2,
Okay.
right?
That sounds great. And then what if I have a month where it's not a problem to give myself 4K and then a month where I only have 3K income?
So let me think. That's a good question. I would ask Nick that. That's also why they say it's better to do, like, I've been told that S corps really only make sense once you're doing like 10 to 15 grand a month. Otherwise, the amount of savings that you're going to get isn't going to be significant enough.
So is an LLC a type of S corp or is an S corp a type of LLC?
So that's what I was going to say too. You don't need an S corp to file as an S corp. You can register your business as an LLC, but
Mhm.
file taxes as an S corp.
And do you think that's what I should be doing from the start, or do you think I should file as an LLC and switch to S corp when I'm making 10 to 15 a month?
So I'm not even an S corp.
Okay.
Right. I file as an S corp, which you can
Okay.
do. I'm an LLC that files as an S corp, and I usually just do that to save part of my business income from the self-employment tax.
Mm.
But once you file as an S corp, then there starts to become like regulations of like you need to track, like, because then you're a corporation, right? And so the IRS requires proof and tracking of like team board meetings, like when did you meet with the board and discuss
Right.
like there becomes other sort of metrics that you need to track to stay in business as an S corp. But you can absolutely just register your business as an LLC and then file your taxes as an S corp, and that provides the same benefits.
Do you think that I should file? Either way, I will register as an LLC. I just don't know if I should file as an S corp or not from.
I would ask Nick. I would assume that Nick's gonna suggest that you don't file as an S corp. Like I mentioned, S corp is like, you're stepping into like corporation world, not like self-employed online business owner world. And
Okay.
so there starts to become like very nuanced like requirements to maintain an S corp. Like you need to have board members, you need to have board meetings, things
I
like
just
that.
mean for taxes, not to actually be an S corp.
So, like I mentioned, I don't think that you get that much benefit filing as an S corp until you're making, 10, 15,
Okay.
$20,000 a month. But you could also ask Nick if it would make sense.
Sure. Okay. That
Right.
is
I
helpful.
guess the reason it kind of goes back to answer the question that you asked before. The reason is because like if there's not excess cash to protect, then it doesn't really make sense. Like if
Yeah.
you're paying yourself a wage of $4,000 a month and your business only makes $4,000 a month, then you're not going to, that all counts as personal income. You're
Yeah.
not going to shield. There's no excess to shield from,
Right. Okay. Dun, dun, dun. Do you think that it's enough to just have the CPA and not worry about like a tax advisor or strategist until you're making a lot of money?
So a CPA can serve as a tax advisor. They're mainly just going to file your taxes. You don't need a tax advisor until you have excess cash to protect. Like I recently just got a tax advisor this year,
Okay.
and a lot of the things that they suggested were just things that like didn't make sense to me. Like is spending a dollar to save a dollar. Like some of the things that they're recommending is for me to make these investments to bring my write-offs down, but it just didn't make sense.
Okay.
So I don't think you necessarily need to until your income is, multi six figures level.
Okay. And also in the book, they mentioned adding sales tax to everything so that you don't have an issue later on. How do I do that? Am I doing that? Like, what is going on with that?
Yeah, so I believe Square and Stripe have an option for you to add sales tax onto the invoices that you send, right? I think you have to look at the state that you live in and look at what the state sales tax is. And then when you go into Stripe, I think there's an option for you to add sales tax to whatever the amount is going to be. And then it'll
Mhm.
just tack on that percentage onto the total. That makes sense.
And I can just do the deduction myself for those first two clients and let Nick know. Okay. Nick is based in California.
He's based in New Jersey.
Okay.
Any other questions here?
No.
Sweet. Okay. So with this will serve as a really solid baseline to stay organized.
Mhm.
Nick will help fill in all the gaps for information on questions I didn't know the answer to.
Okay, great.
Sweet.
Yeah,
All right. Well, keep it
so
up.
much.
Sign some more clients. Let's get it.
Yeah, thank you. All
All
right,
right.
have a good
Peace.
weekend.